a DATCO is a digital asset treasury company. They're
Digital Asset Treasury Company.
That's
All right,
correct.
Definition there I'll need.
Yes. So essentially, it's a business, and we break these into two key categories. The DATCOs, where they are a pure play DATCO. All they do is use capital markets to raise liquidity to go out into the open market and buy digital assets for treasury, and essentially arbitraging changes in price in crypto versus capital markets, propensity to invest in these businesses, and they can serve as a proxy, and they can sort of amass this treasury of digital assets. The other category is opcos that have sort of a DATCO component, or that are essentially a DATCO principally, but have an opco component. And so what that is a business that's, say, is in a traditional space and generates cash flow, and then uses that cash flow as well as capital markets to go out and acquire digital assets in the open market and build that treasury.
So what's government policy? I mean, this is an administration that seems pretty crypto friendly. So what has that meant for the DATCOs, and what might it mean for them in 2026?
Well, we've seen the regulatory backdrop clarify and improve for digital asset companies in general over the last year. I think crypto markets, however, have been in a bit of a risk-off environment. And so while the operating environment has improved for the DATCOs, obviously the underlying token value is critical to the value for their shares. And I think the other piece of this that has maybe a global context is that these are equities. And so as a proxy for these digital assets, there are, in other jurisdictions, tax benefits, of course, to investing in the equity as a proxy, as opposed to just outright owning
the
crypto.
actual token, yeah. Right?
So how have these stocks performed? How do you like to invest in? When you talk to your clients, how do you position these stocks?
Well, we talk about this from a thematic perspective. When we look at the companies that we cover, we cover more of the infrastructure space. So we've been covering the Bitcoin miners. And
so who are they?
So the Bitcoin miners, which are we do not consider them DATCOs, though historically they have held crypto on the balance sheet. But when we talk about the Bitcoin miners and the infrastructure players, they are increasingly pivoting towards AI and HPC hosting, but they're the likes of the Irons, the Riots, the CleanSparks, the Ciphers, the Maras, the Core Scientifics. And most, if not all of that coverage universe is looking at how to facilitate the AI revolution by providing power and infrastructure to support compute. But some of them still have crypto, Bitcoin, predominantly on the balance sheet, and have commented to the street that they're looking to leverage that for liquidity and capital investing needs for this infrastructure.
I especially love when our guests can talk individual, equities. So let's dig into that a little bit. You mentioned Iron a moment ago. They just entered a multi-billion-dollar 5-year AI cloud contract with Microsoft. Tell us more about that.
That's exactly right. So they are providing a bare metal cloud offering to Microsoft, $9.7 billion contract over a 5-year period. Essentially, what they've been able to do is they've been, or they're in the process of developing this, but they've been able to sign this contract. And what they're developing is essentially a fully verticalized cloud. When we think about the neo cloud players, for example, we also cover CoreWeave. Predominantly what we've seen is that they go out and they sign leases with infrastructure providers, data center infrastructure providers. But what Iron is looking to do is Iron is essentially providing the power infrastructure, the data center buildings, and acquiring the GPUs, the compute, and installing that and providing that compute power to Microsoft, to who's leasing it for that 5-year window.